In this video, we're going to look at how we record in the general ledger. This is a ledger account, which is also known as the T ledger. The debits are recorded to the left and the credits are recorded to the right. And on each side, we have the headings, date, cross-reference, and amount. The ledger account can be created for any accounts, such as inventory, loan, capital, and bank. General ledger is simply a collective name we use to call a group of ledger accounts. In a business, we may have many ledger accounts. So, how does it work? We have learned about the general journals, which is used to record transactions. A general journal may be made up of 2 or more accounts. Once the general journal has been recorded, the information is sorted out into their respective ledger accounts. For example, if the transaction affected 3 different accounts, the bank, inventory, and GST, the 3 respective ledger accounts will be affected. Now, we will look at posting the information from the general journal to the general ledger. We will follow these 3 steps. Step 1, is the account being debited or credited? Step 2, what's on the other side? And step 3, we record the date. Here we have a general journal recorded for a cash purchase of inventory totaling to $5,500 plus GST $550. We will start by recording the bank ledger account. Step 1, is the account being debited or credited? Here we can see that the bank is being credited for $6,050. Accordingly, in the bank ledger account, we will record $6,050 in the amount column on the credit side. Next, we ask the question, what's on the other side? Here we can see that on the debit side of the transaction, the inventory and GST clearing accounts have been affected. Accordingly, in the bank ledger account, in the cross-reference column, we record inventory/GST clearing to show that these accounts have been affected on the other side. Step 3, we record the date, which is the 2nd of July. Next, we will record the inventory ledger account. Step 1, is the inventory ledger account being debited or credited? Here we can see that the inventory account is being debited for the amount $5,500. So in the inventory ledger account, we will record the $5,500 on the debit side in the amount column. Step 2, what's on the other side? In the credit side, we can see that the bank was being credited. So in the inventory ledger account, under the cross-reference column, we will record bank. Lastly, we record the date, which is the 2nd of July. Lastly, we will record the GST clearing account. Step 1, is the GST account being debited or credited? Here we can see that the GST clearing was debited for the amount $550. So in the GST clearing ledger account, we record $550 in the debit side. Step 2, what's on the other side? We can see that the bank was credited. And so, in the GST clearing account, in the cross-reference, we record bank. Lastly, we record the date, which is the 2nd of July. This is how the general ledger looks like after the general journal has been posted to their respective ledger accounts. We are now going to look at another example. Here we have a credit sale. We're going to start by recording the transaction in the accounts receivable, sales, and GST clearing ledger accounts. Starting with the accounts receivable, we can see that the account has been debited $1,386, and this has been recorded on the debit side. The corresponding entries on the other side would be the sales and the GST clearing account. And the date of the transaction was the 5th of July. Now in the sales account, we can see that it has been credited $1,260. And on the other side, the accounts receivable was affected. And the date, 5th of July. We also have the GST clearing that has been credited $126. And the other side that has been affected would be the accounts receivable. And the date, 5th of July. In a credit sale, we also have the inventory and cost of sales accounts affected, which are corresponding entries for each other. In the inventory account, we can see that it was credited for the amount $630. And on the other side, the corresponding entry was the cost of sales, which is recorded in the cross-reference. And the date was the 5th of July. And lastly, in the cost of sales ledger account, it was debited $630. And the cross-reference was the inventory. And lastly, the date, 5th of July. Thank you.